Hello everyone, I hope you are all having a great week in the market. Today we have a special guest, Anmol Sin, who is well known for his calls of the 2022 pullback and also the 2020 COVID crash even before COVID hit the market. Anmol is an expert on chart analysis and reading the trends and is also the founder of LiveTraders.com. In this interview, Anmol will be sharing his insights and forecasts of the market in 2024 and also his thoughts on how he sees the crypto market playing out, and also shares a coin that he personally thinks will dominate the space and even outperform Bitcoin. Since the interview lasted longer than we anticipated, I have edited the interview into two parts, part 1 and part 2, and hope you have the chance to watch both episodes, since I do think Anmol's insights of the market will be very helpful on your personal investments in 2024. So with that, let's see what Anmol has to say about this year's market. Now, before getting into the interview, I just wanted to share that Moomoo is having a great promotion, giving out 15 free stocks and also giving out a total of 8.1% annual interest rate for the first 3 months after you open an account. And then from month 4, you get 5.1%, which is actually better than most of the saving accounts that are out there. So if you are interested in receiving 15 free stocks and receiving an annual rate of 8.1% on your cash portion for 3 months, and then 5.1% for the remaining time, make sure you click the link in the description below. I have also started a Discord that is 100% free and have great experienced investors regarding stocks, options, swing trading, chart analysis, and also cryptocurrencies, sharing their ideas and opportunities for investments every day. So if you are interested in being a part of the community, please click the link Discord in the description below. Hello, everyone. I hope you all are enjoying the market in 2024. Today, I have a special guest, Anmol Sin, who has a large following on X and is a well-known successful investor and trader that has founded LiveTraders.com and is also the author of Preparing for Success, 10 Keys for Making It in Life. So today, Anmol will be sharing his insights and outlooks of the market in 2024 based on more than a decade of experience investing in the stock market. So Anmol, thank you very much for your time today, and it is really great to have you on my channel.
Yeah, looking forward to chatting with you. Thanks for having me.
Right. Now, since October 2023, the market has been rallying pretty high. And even though there were, small pullbacks in 2024 or in the late part of 2023, most of them rebounded from the 9 simple moving average and I think keeps going up. So as an expert on charts and trends, can you share how you see the market moving in maybe the first half of 2024 based on the chart indicators and trends that you focus on?
Yeah, so I think right now the markets are obviously in an uptrend. We're above all of our key moving averages and on all time frames as well, daily, weekly, monthly. So we're clearly in an uptrend. Now, that is mostly because people think that the Federal Reserve is going to lower the interest rates later half this year. So in anticipation of that, the markets have been really strong at the moment. However, we are definitely extended a little bit, but that does not mean we're going to just pull back and crash. It could just mean a small pullback along the way, or maybe even a period where we just chop around, a lot of back and forth action and not really trending. So I think I personally don't see the market really pulling back or having any sort of major crash in the absence of news. I don't think that there's anything major that's going to happen in the first half of the year. I think what's going to be more interesting to watch out for is the time between August and November of this year, because there's a lot, going on at the moment in the world. So a lot of risk factors that we could talk about that as well. But a lot of different risk factors in the market at the moment. But purely in terms of the trend, we're in an uptrend. There's nothing wrong with being a buyer. However, what you want to do is it's a trader's market. So when you get some movements on the stocks that you own and they seem to get a little bit extended, you need to learn how to take profits rather than just holding on, because they might be back all the way down later. So
are you on the side that you think the inflation is coming down and the Fed is doing a good job on the Fed fund, height rates, and the soft landing is actually happening? Or do you think that we do need a hard landing or a crash in order to reset everything and have a healthy long-term bull rally to start?
yeah, I think either we do need that kind of hard landing reset. It'll be painful, but then it'll be a reset, right? And we're back again for the next 5-10 years. But the longer we drag it on, the bigger and worse it gets overall in the long term. So that's kind of the risk that we have in the market. So I don't think there is such a thing as soft landing. It's just basically, do you get a hard landing and that's quick and fast, or do you prolong that decline, right? I think that's the big issue that we have at the moment. And there's just a lot of different risk factors in the market. But that's why I think it's important sometimes to not get caught up too much in our bias and what we think the market's going to do, but more so looking at the chart and taking a step back and then saying, okay, right now we're in an uptrend, so we could stay long, right? And if we start breaking the moving averages, we start kind of breaking that uptrend, okay, that might be a warning sign for me to exit or look up. So I think that's why I think technicals really help, is just to take a step back, put a lot of the noise out of the way, and just look at the chart.
So then my question is, a lot of people are anticipating the Fed to cut the rate this March. Um, I'm also on the same boat that I don't believe in soft landings, and I think they're just, growing the bubble more temporarily. Do you think that in March there will be the first cut? And as the Fed says that they're going to be cutting rates like 3 or more times in 2024.
It's absolutely possible that they are going to cut rates. That's what a majority of people expect. And that's probably why we've seen the comeback in the markets that we've seen, right? The markets have gone basically up since October, and all we've done is gone up. And I think that's in anticipation of the rate cuts. The question will be, what shape are we going to be in around that time when we lower rates? Because inflation hasn't really come down, right? Because I mean, if you really ask the regular average person, the food prices are still high, energy costs, oil are still high, mortgage costs are still high, rentals are high, everything's pretty high. So I think the inflation coming down is just like a meaningless number, and that's what happens. The thing is, anytime we get closer to the election, that's exactly what happens. They start making statistics like election, inflation's coming down, let's lower the interest rate so that the stock market doesn't crash and stay up by the time the election comes in, right? That's just the game that every president plays and every Federal Reserve chairman plays, just to keep the president happy. Keep lowering the interest rates so that we get to elections, stock markets are record high, they can brag about it, and then when the new person comes in, then they can start raising again and cause the market to decline. So that's why I don't really read too much into the election year of what the Fed is going to do, because it's very politicized.
Right. I also agree on that. And then I remember that you said that you are mostly out of your stock, but are you then keeping a large portion of your assets in cash and waiting for an opportunity? Or as a trader, or are you just trading or swing trading, riding this uptrend of the market?
So I keep the cash in my Interactive Brokers account, right? Interactive Brokers pays you 4.7% for the cash sitting in your account. So you can keep it there. And then I take swing trades with that cash. So I'll hold something for a week or two, and then I'll get out. And then I'll get into the next thing, ride that wave, and then get out. So I'm taking short-term profits rather than just holding on blindly forever. I think there's just, there's a lot of risks. A lot of stocks have gone up so much over the last couple of years again. And all of the decline that we had in 2022 has already been erased. We're back to all-time highs. So I think there's more opportunity swing trading. And I personally, I love swing trading, and I do that every single year more than like investing in stocks, just because I make more money doing that. It's just a better return on your investment. And again, we've beat the market every single year for the last like 10 years in a row. Except for I think this 2023 wasn't my best year when it comes to swing trading. We still made money, still profitable. But overall, if you look at the chart, and we plot this too, so we plot what if I just put all my money in the S&P versus if I just swing traded with all of that money, and there's a huge difference. So that's why for me, I don't see why I should be investing at this point where you can get a better ROI with trades.
As an expert on the chart, are there major indicators that you keep an eye on that make you confident that we are in an uptrend, and also that we are changing from a bull market to a bear market?
Yeah. So a couple signs to look out for is obviously volume, right? So you look at the volume on the chart and see if, as the markets are going higher, is the volume decreasing? Because if that's decreasing, then that doesn't show that there's buyers coming in. It just shows that there's sellers are not selling, really, right? That's why we're going up. So I think volume is a good indicator. So usually at the end of a move or right at the top, you're either going to see extension of volume, where volume just speeds up real fast, right? Or we have a gap down day, or a day that we're breaking below the moving average, and that's a high volume day. That's usually good signals that, okay, this move might continue to the downside. And then the other things to look out for is the moving average. So I primarily use the 21 MA. I use the 50-period moving average. So when there's an equal distance between those moving averages and prices above it, riding it higher, then you're in an uptrend. There's nothing that's going to stop that, right? So, but when you see the distance between the 21 and the 50 MA start to get shorter and shorter, and maybe at some point they start meeting and they start crisscrossing, and then when the price finally breaks below the moving averages, typically that's a really good sign that we're going to get a downturn Just the extent of the downturn obviously is questionable, but that's typically a good sign that has enabled me to, at least the last 4 or 5 times when we've got a pullback in the market, I was spot on in calling those, and you will see the exact same pattern I just described take place at those levels. If you go back and look at the 2022 decline, even the COVID decline, you'll see the same patterns over and over. So I think those are just some things to look out for. Now, obviously, I'm simplifying it here because we're just chatting, but I think there's a lot more that goes on to it in terms of reading the history of the chart. Where are we coming from? Where are we going? Are we at the end of the move, or are we in the middle of the move? And there's also some art to it. Rather, it's not a scientific approach. It's more art than science, technical analysis always.
So then I think the market has, I think it's generally known that the market has like four steps. And the market right now, a lot of people are thinking that the recession, step four has been done and we're on a new bull market rally. But personally, do you think that we are still in maybe the stage three and waiting for the major crash to come? Or do you think that, in 2022, we had that crash and we're actually having a nice recovery?
Yeah, so I think it depends on the what time frame you're looking at. If you're looking at the daily chart, then yes, the correction was already done, right? We came right back up. This is the beginning of a new trend. However, when we take a look at the monthly time frame or the higher time frame, then this is still stage two, potentially entering three, but there's no signs of a stage three just yet. It's still in a stage two. Now, it could be near the top of the stage two, but it's somewhere still in the uptrend at the moment. And typically, the signs to look out for is when you get a big green day on extremely high volume, that usually will signal exhaustion, and then that's the end of the move. Or typically, when you start the move with, let's say, you start moving up rapidly, and one day you get a decent sized gap down, below all of that, that usually starts the downturn as well. So right now we haven't gotten those signs, so I wouldn't be overly bearish right now. I think the key thing to look out for right now is just looking at the moving averages and seeing if we can hold that or not. 50M is a good signal at the moment, but right now I'm not seeing any indication of like a major decline. Sure, there's going to be pullbacks along the way. We're extended, but that doesn't mean that we're not going to go back up.
And based on your experience in the market, I know that, in the dot-com, the great financial crisis, before the major crash came, it was like a euphoria stage where there was what we call like a melt up. Do you think that we are kind of getting close to that phase where a lot of people are getting FOMO and getting to the market and starting to see this melt up by any chance?
We're starting to see the beginnings of it, but we're not there yet. Like you will know it when we're there. Like like when right before the crash.